With the next guest of the show. Joining me is Kranthi Bathini, equity strategist at Wealth Mill Securities. Kranthi, good afternoon. How do you make sense of the market today? Everything in red, almost barring autos and financials on the back of Navratri cheer.
Hello, Isha. After a strong pullback of the markets, market could not able to hold on to the higher levels. But as long as the market could able to sustain the range of 25,000 level Nifty, the medium to short term direction can be in a positive territory. Most of the action is in a lot of stock specific action, especially the mid and small cap stocks have been quite resilient. And what we can sense at this point of time is if the market could able to sustain the range of this, the crucial support zone of 25,150, we can see some more activity in the markets. But at the same point of time, the global cues and the foreign portfolio investors action also quite crucial for the market to sustain this range. In the previous cases, if you analyze the data in the last 18 months, market could able to sustain the range of 25,000 level for a very short span of time. It is just around 15 to 20 trading sessions. So if this time is different, we need to wait and watch.
Okay, all right. But Kranthi, how are you viewing the momentum that we saw in the auto space and of course the entire consumption basket, given that some momentum could be kicked in from the first day of Navratri itself? Anything that you're positive at this point of time?
Yeah, we can see some kind of a blockbuster kind of a response at the dealer places and all the OEMs like the Maruti, Hyundai Motors, and the companies which have a strong entry level segment. Those stocks have been showing the resilience, and the auto pack has been quite buoyant, and this is the key beneficiary of the current GST rationalization. And the auto sector have been in a consolidation from quite a long time. We can see some kind of a positive returns in the medium to short term. So one can hold on to autos. We can see if the numbers could able to sustain in the next coming months also, and also if there is any kind of a rate cut with respect to RBI monetary policy, we can see the rally in auto ancillaries and OEMs are concerned. The rally can be sustained in the coming future also. So, by and large, autos have been a strategy one need to have a buy and decline kind of a strategy one can follow and one can accumulate for medium to a long term perspective.
Okay. Kranthi, you mentioned about auto ancillary space. Given that the sector has already went through a correction phase due to the tariffs, do you believe that the GST reforms which got implemented yesterday would be able to offset the majority of the uncertainty which is caused by the tariffs?
Definitely, the stocks have majority of the stocks had a impact of these recent India tariff activities concerned, and there were concerns about the export to US as a reason. But by and large, the Indian sales, if they could able to rise in the coming quarters, whatever be the tariff worries were there, it can be offsetted with the Indian domestic sales are concerned. So the OEMs, we could able to see the numbers immediately, but to get the impact, there would be a lag effect with respect to the auto ancillary stocks are concerned. So definitely any dip in auto ancillary space is concerned, and if there is a kind of value buy is there, definitely one can use this kind of a consolidation phase to accumulate the stocks for a medium to long term perspective. And there can be a sweet news or a positive news. We can hear how these the tariff worries which have been weighing on the market recent past. Next 15-20 days, we may get a positive news with respect to any kind of for tariff activity is concerned. That can be a positive trigger for these auto ancillary stocks in the medium to long term perspective.
Okay, okay. Kranthi, let me touch base upon IT sector also, because after the additional 25% tariff, H1B visa hike is another layer of pessimism for the sector. Would you say it's a total avoid for now, or do you believe that, sometime it's just going to be a pressure, it's just a sentimental reaction which the investors need to ride out as at this point of time?
Loisha, two things we need to consider with respect to the IT sector is concerned. we can see a fortnight back some kind of a selective buying and a cherry picking that's taking place. We do observe kind of a value buying we observed in the IT stocks are concerned in a medium to long-term perspective. But the one key perspective to look at the auto stocks are concerned, sorry, for the IT stocks are concerned, the US growth and how the companies in US are going to increase their IT spending, and we have a positive response from Federal Reserve to reduce the interest rates. That can be a positive for IT companies. But when the stocks have been recovering mode, the big blow for IT stocks came in the form of H-1B visas, which is going to weigh on these companies' margins in a medium to long term perspective. But if you see the data, Indian IT companies have been quite resilient. They witnessed TMT bubble in 2000, technology, media, telecom, and Y2K booms, and the companies went through the great financial crisis in 2008, and most recent to our memory, the companies went through a pandemic situation, but they are quite resilient. They could be able to weather all these kind of situation. But in terms of the policy making is concerned, that has come like in the form of H-1B visas at this point of time. Right now, given the kind of automation activity that's rising up, and also the AI as a perspective, could offset these kind of worries for IT companies. If the investors have a high risk appetite and a long term horizon, a horizon of 2 3 years, any dip in IT pack one can accumulate. But for a medium to short term perspective, it's a definitely avoid at this point of time to get a greater clarity with respect to the margins and how the companies are responding with respect to the new changes. That alignment is crucial for IT companies. Definitely, no, for medium to short term perspective, if the investors are really long term, so one can start accumulating in a staggered manner.
Okay, okay. Kranthi, apart from IT, banking sector, another core sector for the markets, that also continues to underperform. When can we expect a turnaround that could happen? Because past couple of weeks that we have seen, banking sector is trying to make a comeback. But would you say that it is sustainable going ahead into the medium term at least?
Lovisha, one thing for the banking sector, one need to take it into cognizance of how the activity of foreign portfolio investors. For the month of August, we witnessed foreign portfolio investors exiting around a tune of more than 45,000 crores, which translates to around $5 billion dollars around. So that is the reason for the consolidation of the banking and financial services stocks are concerned. If the foreign portfolio investors have to come back to India, the one of the key beneficiary for them and one of the favorite sector for them have been banking and financial services. So the FPA activity turns as a net buying sphere, then the key beneficiary would be banking and financial services. But if the India's growth prospects are concerned and the sustainability of growth is concerned, one of the key beneficiary can be banking and financial services. If the investors have a long-term horizon, definitely one can cherry pick the stocks in banking and financial services with a perspective for medium to longer term. But FPA activity is definitely crucial for the banking and financial stocks in the medium to long term, and also the MPC, how the interest rate cycle is going to be, definitely have some kind of impact on the banking and financial services stocks in a medium to longer term perspective.
Kranti, but if banking and IT, both of them remain under pressure, can we actually achieve and can we actually give consumption greater onus so that we can achieve that double-digit growth target that we are aiming by the end of FY26?
With respect to the IT is concerned, as you rightly mentioned, there have been a double whammy for these stocks. But banking and financial services stocks, we can see some kind of a positivity going forward, as the monsoon has been good this year, and also if the RBI get into one more kind of a surprise rate cut because inflation has been cooling off, which can be favorable, and due to the GST reduction, we can see the interest rate sensitives like auto sector can be a positive. In the next coming couple of quarters, okay, we can see some kind of positivity that's going to emerge in the banking and financial services. With respect to IT is concerned, still the US growth prospects and US inflation worries still have been worrying for IT sector in a medium to short term perspective.
Okay, okay. Kranti, but so far FIs have been net sellers for India. Do these global trade uncertainties further keep them away for the time being? And of course, the expensive valuations have also been a key major concern for majority of these FIs.
Yeah, right now, if you observe the data, India have been the most least favored market in terms of the emerging market space is concerned. The main concerns have been the tariffs on India, which has been completely unwarranted and unexpected. The narrative has been changing so fast. There has been a narrative a quarter back. Buy India, sell China, and this narrative turning from buy India, sell China, this narrative has been keep on changing. If this narrative keep on changes, the and also the U.S. policy makers' decision on unwarranted tariffs, that has been creating some kind of a discomfort for the foreign portfolio investors in the medium to short term. So they have been trying to be on sidelines to make any kind of serious investments at this point of time. If we can get some kind of a growth prospect strong, earnings recovery strong, which has been lukewarm in the past couple of quarters with respect to the earning recovery is concerned. So markets have been waiting, the foreign portfolio investors have been waiting for a stronger set of growth recovery. And as and when the market comes about 25,500 and 26,000 range, there would be a greater concern with respect to the valuations are concerned. But given the kind of the domestic strength that the government has made measures to insulate the economy and looking towards the increasing the domestic demand and also the growth prospects are concerned, and also the recent couple of upgrades with respect to the Indian economy growth prospects are concerned from Fitch and also S&P, the longer term outlook still looks sanguine. So I don't say Indian markets are cheap at this point of time. At the same point of time, they're not more expensive given the kind of the larger outlook for the growth and also the company's earnings are concerned. So it can be more about stock specific, sector specific at this point of time, rather than looking at the markets, the headline indices. Because if you observe in the last 1 year, the headline indices are still remains languishing around the 25,500. This is the range market got stuck up. But we can see a lot of activity in the individual stocks and also the sectors. So this is the template that's going to play for some more time.
Okay, okay. Kranti, you mentioned that earnings have been one of the key reasons why FIs have remained on the sidelines as well. But if you look at so far this year, they have remained more. They have preferred Taiwan or China as their preferred destinations from the emerging markets to play on the global AI trade as well. Do you believe that India lacks this conviction also, even if we get earnings back on track and of course the GST triggers come into play?
The FPAs have been sidelined because of the unwarranted tariffs that got imposed on India. So this has been one of the key concerns for them. So if the concerns with respect to the tariff worries could able to turn neutral, if there is any positive statements that comes from the US administration, that can be a positive trigger for the markets in the medium to short term. That's where the foreign portfolio investors have been waiting at this point of time. So I'm also the crossed fingers how this entire episode is going to be. Till the time, okay, the narrative has been keeps on changing. If you remember, just a couple of months back, India was the most favored nation, and we are waiting for a congressional approval for the most favored in terms of the tariffs are concerned. But the narrative has completely changed, and it created a lot of uncertainty. And one thing the foreign portfolio investors never like is the uncertainty. If this uncertainty get over, we can see some kind of a positivity that can come back in the markets.
Okay, okay. Just one last question before we let you go, Kranthi. What is the next big trigger that the markets are watching out right now? And of course, the key risk that is what the markets have been pricing in.
The one thing markets are looking forward is the Q3 quarter kind of a results, how the results are going to pan out, because we had a decent monsoon. The domestic sector has been waiting for the strong recovery. So, and also the kind of GST 2.0 reforms that we have taken. So, how these measures that are going to translate in terms of the earnings are concerned, that's where market is going to be looking forward. And also the tariff worries, as we have been watching. If any kind of turnout with respect to both of them, okay, in a positive momentum, we can see new highs. The market can able to go back again. So these are the two positive triggers. The market is watching it and looking for these kind of positive triggers at this point of time.
Okay, okay. All right, all right. With that, we have to let you go, Kranthi. But thank you so much for your time and connecting with us.
Thank you, Loisha. Always my pleasure to speak to you and share the views with all the viewers of Money Control.
Yeah, thank you. Thank you, Kranthi. All right, with that, we have come to an end of this edition of Closing Bell. But before you go, let me introduce you to Moneycontrol Super Pro, which can be your ultimate investment superpower. You can get all the live calls, trading, and investment ideas from SEBI registered experts, pre identified chart patterns, and AI powered stock alerts right on your WhatsApp to help you trade and invest with confidence. Super Pro is where the serious investors should stay, and you can download the Moneycontrol app and subscribe to Super Pro today itself to get all the alerts on your WhatsApp.